What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we continue to see that low volume melt up as we approach the gap fill and SPY, but we do have a huge data release with CPI data on Thursday. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So today in SPY we were up 0.7% and we did get the daily price action close back over that critical resistance at SPY 390. And we did get the third day in a row closing back over the 20 daily moving average and back over the 50 EMA. So strictly following price action, it's hard to see this as anything other than a bullish breakout, which means the bulls are making progress on pushing up towards filling that gap just above 396. Now keep in mind at that gap fill that is going to be very strong resistance because we also have a negatively sloping 200 daily moving average, and then just above that we have the bear market resistance trend line at SPY 400. Now late last year I was talking about the Santa Claus rally and how this was going to be possible that in early January we could get this late rally in the market because too many people were getting complacent shorting the market. And typically speaking, the market is going to move to hurt the majority. And I think that is exactly what the market is currently doing. So keep in mind, while we are in a bear market, there is always going to be counter trend rallies. So as we approach this resistance, I want you bulls to be taking risk off the table because we are approaching bear market resistance, which means we could be putting in another lower high before the next lower low. If you've been bearish this entire time higher, then you're already ignoring my suggestions because I said as SPY is above critical support, I think you're much better off being a bull than being a bear because this critical support level is absorbing all of the selling pressure, and that typically means we're going to see a bounce. But now that we're getting the bounce, I think you should be reducing risk as we approach critical resistance. And I think there's a very good chance we're going to find very strong resistance between 396 and about 399. So yes, we have CPI data coming up on Thursday, and yes, it is a very major catalyst. But keep in mind the stock market is very good at pricing things in before they happen. And I think the CPI data is very well known that we are very likely going to see a lower year over year comparison. So yes, there is the possibility of a very bullish surprise, but you need to continue to follow price action and manage your risk around these critical levels. As bulls, you now need to manage your risk around this 50 EMA, which is right around 387, or the breakout right around 386. Because below that, we could come all the way back down towards this support trend line and critical support zone between 380 and 381. If we lose critical support, we will be looking for the next bear market leg lower, and we will instantly get a lot more bearish if we start losing these critical support levels. But in the short term, you can stay bullish above SPY 386 for the possibility of filling that gap just above 396. On the Nasdaq 100 triple Qs, we were up 0.85% today, and the triple Qs did get the first day of a bull breakout, which was that close back over the 20 daily moving average and above this resistance trend line, which is right around triple Qs levels of 272. We still have the 50 EMA above, which is just below 276. And if we break through all of that resistance, I expect to see the triple Qs getting up to about 280 or closing the gap right around 283. Just above that, we have very strong bear market resistance right around 287 to 288. So as we approach these critical resistance levels, you need to be very cautious of that rejection of the lower high before the next lower low because we are still in a bear market while we are below these resistance trend lines. Critical downside support in the triple Qs is going to be right around 268 all the way down to 260, and we need to lose the support at 260 to continue for the next bear market leg lower, which would likely be 254 and then 250. So you can stay bullish above 268 for the possibility of running up towards 280 to 283, and you instantly need to get a lot more risk off if we break down through that support level. On the Dow Jones, we were up 0.58% today, and the Dow Jones got the third day in a row closing back over all of the moving averages, and it is developing a bull trend, and it's no surprise that the Dow Jones has already been looking the most bullish. So with the Dow Jones with the price action above all of the moving averages, and we do have the double bottom confirmed on the break above 334, that does mean the Dow Jones is trying to get up to about 341, and then above 341 we could run all the way back up to 346 and then 350. So in the Dow Jones, you should be staying bullish while we're above 333 to 334. And then if we break below that, you can get a lot more risk off for a retest of the support zone down here between 327 and 328. Without a doubt, this is that nice low volume melt up, which means we have not yet encountered the big brain bear who is likely waiting at higher prices. On the Russell 2000 IWM ETF, we were up 1.48% today, and IWM is trying to get that bull breakout above the bear market resistance trendline at 180, but we're going to have very strong resistance just above at the negatively sloping 200 daily moving average around 182. If we get that bull breakout above 182, we're likely running all the way back up towards 188, and you can stay bullish as long as we're above the critical breakout zone between 178 and 176. On the ARKK ETF, we were up 2.47% today, and we did get the second day in a row closing back over the 20 daily moving average and that resistance at 32.5. From here, we're likely going to see ARKK closing the gap around 34.42 and also testing that negatively sloping 50 EMA. The bull breakout will be above 34.6, and then we can run all the way back up to 38, and that will be looking a lot more bullish if the ARK ETF can break above 38 and run up to resistance at $40. You can stay bullish in the ARKK ETF above 32.6 because if we break below that, we're likely filling the gap at 31.68. On the VIX, we were down 6.28% as the VIX continues to crush, and we did see the VIX crushing back down below 21 as it's heading back down towards that support at 20. Remember, VIX levels of 20 have been exactly where the VIX has been bouncing off the entire bear market, but if the VIX crushes down below 20, that means fear is leaving the market, which means we could actually go into a sustainable bull rally. So watch the VIX very closely because we're going to know very soon if we're going to bounce off support at 20 or crush down below it and head down towards 18. On Bitcoin, we're currently up 1.5%, and Bitcoin is trying to get that bull breakout over all of the moving averages, and the next critical resistance will be just above at 17,800 because if we break above that, we should easily run to 19,000 and then the 200 daily moving average at 19,500. Manage your risk as bulls right here at the breakout at 17,000. Or you can use this support trend line down here right around 16,600. On Amazon stock, we were up 2.87% today as Amazon is back over that critical resistance at 86 for the second day in a row, but we do have a gap to fill around that support zone. We could pull back from the 50 EMA and bear market resistance trend line, which is up here between 93 and 94. But if we get the bull breakout, we could start running all the way back up towards 102 and that gap fill around 110. Manage your risk as bulls right here at the support breakout at 86 because if we break down below support, we could be coming back down to 81.7. On Microsoft stock, we were up 0.76% today, and Microsoft is trying to break back over the 5 EMA, and overall it is still in a bear trend while it's below this resistance at 242, but we do have a very large gap to fill to the upside at 237.4. If you want to play the gap fill, you need to manage your risk around 225 and 222 because if we break support, we're likely coming down to 214, and below 214, we could invite capitulation. This is very low volume in Microsoft, so we're not seeing the panic selling just yet, but we will see panic selling if we continue to blast through support levels. To the upside, watch for resistance around the gap fill at 237 and that critical resistance at 242. On Nvidia stock, we were up 1.8% today as Nvidia is breaking back over critical resistance at 156, but we're still at the bear market resistance trendline around 160. Above 160, we'll be getting more bullish for a retest of 166, and then above that, we'll be looking for the gap fill at 174. If we break back down below 156, this is a false breakout. We're coming down to fill the gap around 150 or retesting the strong support at 142. On Tesla stock, we were down 0.77% today, and Tesla is continuing to find strong resistance around 123, which is no surprise, and there is the possibility we do fill the gap down here at 114.39. We tried to fill the gap today and got very close, but we did not fully fill that gap, so there could be more downside coming in the future. However, we are seeing very high volume buying around this very critical weekly support zone around 107, so there is the possibility this stock is trying to put in a bottom, which means we could start getting a breakout above 123 and make a very quick trip to 138. If we break above 138, we'll be looking for the next targets at 155 and then 167. And you can manage your risk right here at this support zone at 107 because if we break that, we're likely going to 94. On Apple stock, we were up 0.45% today, and Apple did squeak out a close back over the very critical support at 130, but we are still below a negatively sloping 20 daily moving average, so we still have critical resistance just above around 133. Above 133, we have resistance at 135 and then 139. And if we can blast through all of that resistance, it will look like Apple is breaking out of the bear market, which means we could start back up towards 150. If we break down below the support at 130, look for the next leg lower at 125 to 126 and that weekly price target at 122. On the financials, we are up 0.57% today as the financials continue to close above all of the moving averages and continue to develop a strong bull trend. The industrials were up 0.55% today, also with price action above all of the moving averages and also in a full bull trend. The healthcare sector was up 0.84% today, back over the support at 134, but closing just below the resistance around 134.6. The energy sector was up 0.71% today, finding support at the 50 EMA and filling the gap. So now we just need to get the bull breakout above the resistance at 88.6, and then we can make another attempt at the previous highs. So jumping back over to the S&P 500, it does look like we are getting that very late Santa Claus rally up to close the gap near 396, so that remains the price target while we continue to close above the 20 daily moving average and the 50 EMA. Just continue to up your risk levels as bulls, and if you're bears, you really need to be waiting for the higher resistance levels where the big brain bear is waiting, because you want the big brain bear on your side if you're trying to short this low volume melt up. Remember, bulls take the stairs up and bears take the elevator down, and right now we are getting that very slow, low volume melt up, which is the stairs up, which means the bulls are still driving this market. That doesn't mean we can't put in a lower high and continue into the bear market with the next lower low. So continue to remember the longer term degree trend is still a downtrending bear market until we break out of the bear market resistance. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank Trade Alerts or learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, come join us over at the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.